the local index will be facing higher markets on the back of upbeat sentiment that the U.S. Federal Reserve will slow its interest rate hikes. Now, the JSE closed above the 80,000 mark for the first time ever on a Monday, riding on that chair, perhaps I should say. Simon Brown is JustOneLap founder, joining us now for a quick update on how the JSE is shaping up in early trade. Simon, good morning to you. You've heard the big talk around that 80,000 mark. So, your quick assessment of how the JSE is likely to fare today, and what should we make of that 80,000 points?
Morning, Polly. Truthfully, 80,000, it's an emotional number more than anything else. But it's nice to do. We are green again this morning. We're up about 0.5% with pretty much gains across the board, the exception being financials, a little bit of red creeping in there, and our currency trading a little bit weaker as well. We have, of course, got a rate announcement on Thursday. You mentioned the US. They've got another rate announcement on Thursday next week, but it really is all around next week from the Federal Reserve. That's what we're going to be keeping an eye on. And as a quick aside, China's closed this week. Hong Kong is closed yesterday, today, tomorrow. So we're not getting any price action from Tencent, which is leaving Naspers and Process, who usually do the heavy lifting, not really helping in this current run.
Yeah, let's quickly launch into company news. Sasol publishing its production and sales matrix and an update on renewable power integration in its South Africa operations. Talk us through that development.
So the production update was slightly down on the previous period. The market was expecting that, a couple of percentage points lower. That, as I said, expected, not the big shock. The renewable energy, that's quite interesting. They've got a project that will come in first quarter of next year, 69 megawatts, and then a 200 megawatt project which will come online in 2025. These are both renewable, wind powered. Their target is 1,200 megawatts by 2030. So we're going to get a lot more of this coming from Sasol and truthfully from broader industry at the same time. But it is showing Sasol's on the ground and getting infrastructure built and getting that independent and renewable energy to their plants, starting with Sasolburg.
Yeah, the Foschini Group publishing a trading update, and listen to this, they've added that load shedding is 2.6% times worse than in 2021. I'm sure there are many other companies who feel this way. Your quick assessment of how this company is performing?
It was a good update, particularly South Africa. They've got some acquisitions which have helped. They're moving into home. That is helping. They recently, a year and change ago, acquired Jet. They're rolling that out. That is helping. It was a good update. UK struggling a bit. They make the point that wage increases are not keeping up with inflation, putting people under pressure. But I think you're right that load shedding perhaps was the highlight. It shows you, they say they've lost 250,000 trading hours. That is humongous for anyone. And of course, if Foschini can manage it a bit better, they can afford generators and renewable energy. A lot of the small independent retailers are the ones who really bear the brunt here.
Let's conclude with the building material retailer. That's Cash Build's store sales revenue, which dropped by 5% in its second quarter to end in December, as the home improvement boom, I suppose, dwindles. And it was very interesting. Right at the start of the pandemic, I think, people sitting at home and suddenly discovering that they wanted to do some home improvements. But clearly, there is now a downward trend on this.
Yeah, absolutely. And you're right. During the pandemic, suddenly we were noticing cracked tiles and paint that needed redoing and the like. And there was a pull forward effect. A lot of stuff we might have done in a couple of years when it became perhaps worse, we did earlier during the pandemic period. They benefited hugely from that. But it means that painting you might have done this year, those tiles you might be replacing this year are already done, and they've already done the sales for that. And then, of course, add to consumer under pressure, inflation, interest rates, price of petrol, even though it's down in January. That's putting pressure on a consumer. So they've got almost a double whammy, which then actually 5% drop is not insignificant. But if you consider the headwinds that they're running into, as I just mentioned, actually not a bad update at all, I thought.
Simon Brown, thank you very much for that markets update. He is founder of JustOneLap, and he is giving us the markets update there.